Hello and welcome to Let's Talk Business. Now, volatility was back on Dalal Street today. Markets ended the month on a somber note. Markets snapped 2 days of gains as investors look forward to the key interest rate decision from the US Fed. Hiral Dadia with the wrap of all the market action.
Markets end in the negative terrain today, and clearly if you see in terms of Nifty as well as Bank Nifty, it was an absolute interesting session because the decline has come in after 2 sessions of gains. Overall, in terms of the Nifty as well, we've ended actually below the 19,100 mark. And you have Bank Nifty, which has ended below the 43,000 level. Sensex as well, we've seen cuts coming in there below the 64,000 mark that we saw. RIL, ICICI Bank as well as M&M were the top contributors in terms of the drag in today's session. Overall, the key event now everyone is eyeing is the interest rate decision by the US Federal Reserve, which is a day later. So that will be interesting to watch out for. This nervousness and this slight bit of, downtick that could continue as well. Let's quickly look at few of the stock-specific action that we've seen as well as sector-specific. Real estate sector advanced while shares of auto were the ones that were under pressure in today's session. Overall, if you go to see very quickly in terms of, the mid-cap index, that was one of the top gainers with gains of 0.4% coming in there. And the pharma back was the top loser as well. In terms of movers, SBI Life, HDFC Life. So life insurance players saw some momentum. Titan, Asian Paints and Kotak Mahindra Bank were up in trade, whereas on the losing end, Sun Pharma ahead of numbers tomorrow, the stock was trading under pressure. M&M Eicher Motors is also seeing some bit of nervousness ahead of the auto sales numbers that will start trickling in tomorrow. LTI, Mindtree, ONGC were a few of the other names. Arvind saw some smart moves today on the back of earnings. NIIT again was up in trade on the back of earnings. Rainbow was under pressure. DCM, Shriram was one of the newsmakers. Z Entertainment on the back of the SAT order saw some 5% up move in today's session. DCX Systems was up in trade on the back of earnings. Blue Star advanced over 9% on the back of the profit surge, as well as a GET&T got an order worth 500 crores on the back of which we did see some smart moves. So overall, yes, a lot of movers and shakers that were there in the market today, but clearly the action has been slightly negative. The mid-cap index outperformed the benchmark indices with gains of 0.3%, whereas the small-cap index ended flat. But this nervousness will continue, taking into consideration what comes out of the US FOMC, because, again, the commentary from Bank of Japan was kind of inconsequential, so no major reactions that did come out from there. Back to you.
All right. Sensex reaching the 1 lakh mark could soon be a reality. That is according to Mobius Capital Partners founder Mark Mobius, who remains bullish on the Indian market despite global uncertainty. Here is his overall outlook on Indian markets in the coming years.
Are risk assets currently looking worthwhile, valuable, or are the headwinds just too large for risk assets by and large?
Well, there'll always be headwinds. There's no question about it. And people have got to keep in mind when you're investing, the best time to invest is when you have money. But investing means investing with the knowledge, with research, with patience. And, you can say, oh, I'm afraid the Sensex is going to correct tomorrow. Well, you don't know whether it's going to correct. It may go up. So you're best to do dollar cost averaging. In other words, putting money in at different periods. I do believe that in the next 5 years, however, the Sensex will probably go to 100,000. And with that in mind, if you believe that, then it's best time to invest.
Got it. And I'll come to that conversation as well. And I'm presuming that all of us agree that timing the market is a mug's game. But I'm still trying to understand, do the headwinds currently, which is the yields, the geopolitics, so on and so forth, make you believe that tactically there could be better times a few months down the line?
There's no question. There's a great sucking sound taking place now.
Okay.
Because with interest rates at 5% or 4 or 5%, a lot of people are thinking, hey, why should I be in the stock market? I should be putting my money into bonds. So that's the reason why you've seen a lot of these markets moving sideways and maybe a little bit down. So yes, probably there would be a correction coming along, but that's not a prediction. Nobody knows.
Agreed completely. There is a lot of talk of how the higher yields would lead to a problem for emerging market companies which have to refinance their debt both in 24 and 25. Is there a clear and present danger?
Definitely. This is one of the things I've been telling the people, look, we go by the criteria of a high return on capital and low or no debt. Because with interest rates at 5%, a lot of the companies that have been relying on leverage are going to be in big trouble. So you've got to get out of those companies.
Okay. And with all of this in mind, you still believe that over the next 5 years, as you said, Sensex reaches 100,000, and India, if I'm not wrong, might still be a market to reckon with relative to a lot of other EMs?
Well, actually, India will probably become bigger and more important in the context. If you look at the emerging markets index, you'll see that China dominates, or at least before, even with the correction, China is big. But India, I think, is going to be coming up. You're going to see India becoming much larger.
Okay. There's a lot of sell-side broker firms, global in nature, talk to us about how there is oodles of money waiting on the sidelines. FPIs have made the applications for getting registered in India, and we post May 2024 elections getting over, we might actually see a deluge of money coming into India, everything else going right. Is that something that you subscribe to as well?
Yes. You must remember, the Indian market is driven by Indian investors, first and foremost.
Right.
And there's a lot of money that's coming into the market from Indians. And of course, then added to that, you'll see the foreign investors coming in. But I think it's very important for India to make it easier to try to eliminate some of the barriers to investing.
That's been a perennial complaint from a lot of global investors. Some ground has been covered. You think a lot more remains, or some some small niggles?
A lot more has to be covered. In other words, it's got to be easier for not only institutional investors, but foreign investors, individual investors to invest.
Okay. Top of your mind, anything that you reckon something should be done? I mean, there's a budget coming up at some point of time.
For example, I would love to open a personal account in India and bring money in and get it out. That's not possible now.
Okay. And then some others. Cool. Okay. Mark, the other thing is you've all through the years that I've heard you've been a big proponent of smaller companies getting bigger, maybe across the world, but definitely in India. We've seen the last 6, 9, 12 months, Indian small caps and Indian mid caps do far better than what the larger companies have done. Maybe because of the individual flows, maybe because of the SIP flows, so on and so forth. Is that music to the ears for you?
Yes, definitely, because that's where we're investing.
Exactly.
We invest in the small and medium cap stocks.
Right. And you still believe that there is merit out there despite the rally?
Absolutely, yes.
So I mean, without getting into necessarily specific names or etc., but there's a lot of newer themes that have gotten formed at the mid cap and the small cap and in India. And then there were the existing themes as well. What within this universe excites you the most? Where is it that you're parking money? What themes?
Companies with technological expertise. Now that, I don't just mean software companies, but companies that are using technology to improve their efficiency and their profitability. Nowadays, the big challenge for every company is how to use technology intelligently to improve their behavior and their operations. So, for example, let's say you're running a restaurant. Are you using a delivery service? Are you using the internet to promote your brand? These are all the kinds of questions we ask when we look at companies.